diving into during today's training. Look, I talk a lot about fundability and the things you need to know that make you more lendable, that make you more fundable, that set your business up where lenders and credit issuers want to actually give you money. But the reality is that's only part of why you want to have a fundable business. When you have a fundable business, there's so many other benefits that are going to help you. And that's exactly what we're going to dive into today is what you need to know to run a fundable business and the things you need to know that help you get more money. By the end of this training, you're going to know exactly about maybe a handful of insider tips and tactics that are going to help you set up your business the right way. And we're not going to dive into the steps of fundability today, but we're going to talk about inside secrets that if you're just doing these things and running your business, lenders are going to want to give you money. And that really is half the battle. I mean, more than half the battle is setting up your business where lenders want to give you money. And a very small portion of it is stuff that you think matters when it really doesn't. So today we're going to be decoding this whole thing. You're going to leave this training by having your business set up where you're actually running a business that makes you fundable, where lenders want to give you money. So look, we've talked about Fundable Foundation a lot, and a fundable business just opens up all kinds of opportunities on the financing and business credit side. It really sets your business up where lenders and credit issuers want to give you money versus repel you because you don't meet their basic criteria, their basic foundation. It basically makes it really easy for you to get approved for loans when you need them. So if you think about this, you've applied before for a credit card and got one of two outcomes. You either got an automatic denial, or I should say automatic approval, or that dreaded message that you'll hear by mail in 7 to 10 days, which is almost always a denial, right? So we understand that computers instantaneously are making decisions, and we call this fundability. And when you have your business set up where it's fundable, and when you're understanding what they're looking for and have your business structured where you're running a fundable business, well, it just makes it way easier to get the money you need. And that's more important now than ever, right? Stock market's horrible through September. All signs, record high inflation, even hyperinflation. Interest rates are making a very, very, very consistent climb to double, if not triple, by the end of the year. They're already double. They're now getting towards tripling at the end of the year on things like such as mortgages. So now is the time as consumer confidence starts to decline, as we clearly see more and more indicators of a recession, you got to get your business set up the right way to get money, because when we get deeper into a recession, it just becomes harder to qualify. Lenders and credit issuers want to give less money to less people, and you want to be one of the people they want to give money to, not one of the people that they're not interested in giving money to. And of course, this stuff will actually just make it easier to do a lot of other stuff, such as bookkeeping, tax preparation, etc. as well. Now, remember, when we talk about fundability, there's about 5 components to it. Fundable Foundation's only one. And I talk about that all the time. Setting up your entity, setting up your phone number, your address, knowing your industry, any ICS code. But all that stuff I talk about all the time is only one pillar of fundability. There's really 5 total pillars of fundability. So if you get the foundation set up right, what do you do after that? Well, that's exactly what we're going to be talking about right now. But you also got to keep in mind that this is a journey, not a destination, right? So it's not just like you can build a business that's fundable and then it's over. It's just like business credit building. Oftentimes people ask me, hey, how long does it take to build business credit? And I say, well, there's no end to business credit building. That's like me asking you how long it takes to build your consumer credit, right? That's a tough question, because what do you mean? Like, your building of credit never stops. You continue to get more credit, use more credit, and and have the ability to be able to borrow more and more. Business credit's the same. Fundability is exactly the same as well. You've got to run a business where it's fundable to be able to have the best chance of getting money. Let me give you a simple example. Bank statements. Lenders are looking for very specific things in your bank account, whether they plug into your bank account, whether they ask you for bank statements. They're looking for things like not having a lot of non-sufficient funds, not overdrawing your account, having money in your bank account at the end of each billing cycle, or when your statement date basically comes due, basically at the end of the month. They want to see a lot of transactions. They want to see a lot of consistent transactions. They want to see the money going in the account increasing, not decreasing. So there's a handful of things that lenders are really looking for. So I tell business owners this all the time. When somebody asks you for something, when the lender asks you for a document, they're not just asking to see if you have it. They're going to scrutinize that document looking for very particular things. I gave you one example of about 5 things that they look for when they're reviewing your bank statements. They're not asking for them to see if you have them. They're asking for them because they're looking to make sure that you meet certain criteria that fundable. Now, that's just one example, but there's a lot more to fundability beyond that. And by the way, tell me where you're coming in from. I'll give your business a shout out right here on the stream. We've got Tia Man, here we go, and Frederick, where are we at? Tia Man from Illinois. So thank you very much for saying, tell me your company name, where you're coming in from, and I'll give you a shout out right here, like free publicity right now. So tell me where you're coming in from. Tell me all. So you run a fundable business. Well, first of all, you need to get and use business credit responsibly. We're going to decode that. You need to get business funds and personal funds separate. SCORE, SBA, Inc., Entrepreneur. They all really hone because it's so important for you to run a fundable business by doing this. You keep up with your accounting as well, and you don't really want to neglect your personal credit. So there's at least 5 things here that you really want to do to make sure you are a fundable business. Now, business credit's definitely one of them because you got to build the strong business credit. Sitting where I sit and helping tens of thousands of business owners through this process, we oftentimes have, if I said all of our clients and their 2 groupings. One is your newer business owner or somebody that struggled to get money before, maybe in terms of what they're getting. And the other is a very well-established business that's trying to get high amounts of money, and business credit, lack of business credit's become a barrier. We deal with these clients all the time. 2, 3, 5, 7, $10 million companies who all of a sudden they had a credit line and the lender called it due because of business credit quality. They're trying to get a commercial real estate loan. They're trying to get equipment financing. They're trying to get revenue lending, an SBA loan, and they're denied because they don't have business credit. So last week we had a live event called our Business Loan Broker Challenge. We had all these lenders come on and educate the potential loan brokers of what they need to know to be able to place customers with them. And that was one of the big points that the equipment funder that was on that call actually mentioned. Look, business credit's a big factor in approval. A lot of business owners still don't recognize that. A very smart friend of mine messaged me and said, hey, man, I'm looking to kind of change some things around. And I want to know, is business credit really even looked at? And I said to him, I said, let me ask you something. Why wouldn't it be? Think about it. Why would a lender want to lend any business money without looking at the pay history of what that business has done? Like, it doesn't make any sense. Like, why would I want to lend you money as a consumer if I can get your credit report and see how you've paid other people back? The only thing lenders and credit issuers really care about, the only real factor, it's only one, are you going to pay them back? They spend all kinds of money, all kinds of energy, all kinds of personnel just trying to determine one thing. What's the likelihood that you would pay them back? Now, here comes the business credit bureaus. And the business credit bureau's entire purpose is to gather data and then sell it, and then also take that data and put it into calculations or algorithms that create scores that predict, guess what? The likelihood you're going to pay them back. So lenders and credit issuers heavily rely on business credit data because the bureaus are doing the work for them with predictive analysis to tell them the likelihood that you will pay them back. So instead of them trying to figure out their internal calculations and find data from 100 different places and come up with their own predictive models of how likely you are to pay them back, there's only one thing they have to do. They have to get your business credit report, and it does all of that for them. So you've got to focus on building strong business credit, because even if you get through the early stages in your business, you will get roadblocked when it comes time to get longer term loans, lower interest loans, SBA loans. You just can't get that stuff without it. And the stronger your business credit profile is, the more fundable your business is, the easier it is for your business to actually get the money you need at the terms you need it. And I can't say that enough. If you've ever gotten a loan, a credit card, a credit line, and you didn't like the interest rate, you didn't like the term, well, business credit's a major factor in that. Your score predicts the kind of actual interest rate and term you're going to get. Now, a simple example, this is mortgages. I owned a very successful mortgage company. And I can tell you, if you've ever priced out a mortgage, if you've ever looked at the rate sheets of mortgages, the rate that a customer gets is 100% directly proportional to their credit score. I can look at my rate sheet. On the right here is credit score, and then on the left is the rate. And as the credit score goes down, the rate goes up. It's that simple. So the pricing I can get a customer is 100%, not 100%, but it's in large part based on that consumer credit score. Business credit's not much different. The rates you get on credit lines, loans, credit cards is in large part based on your business credit scores. Your business credit scores predict the likelihood that you'll pay back that money, and predict your risk. And the better risk you are, or the lower risk you are, well, the better rate you get. So we've got to make sure that we're building a strong business credit profile. Even if you get away in the early days of the business without it, it's going to catch up to you when you need equipment, when you need real estate, when you need financing of many sorts, including being able to come in and be able to, oh, it's better now. Sorry about the audio issues, everybody, including being able to come in and be able to come and get loans and credit lines as well. And we've got Torrance Homes LLC from Fort Worth, Texas, Deerfield, Florida, YCY Solutions is in the house. Jared from California, Zion, Z-Z-Z-I-O-N. I love that. We got Ohio in the house, and I'm glad the audio fixed because I just paid attention to the fact that it was breaking up. But if that happens again, let me know. I've got all kinds of microphones around me I can turn on. The second thing is you got to use your business credit lines consistently to free up cash flow. So actually, I had a buddy of mine call me last night. He's a very big lender in the funding space. He said, hey, I got the ability to report to the business credit reporting agencies. Does it help your clients if they have like a really high trade line on their business credit report? And I said, yeah. He goes, like 50, 60,000. I said, yeah. He goes, can I charge $2,000 for that? And I go, no, you can't. He said, why not? I said, because what we found with business credit reports is the number of accounts somebody has is more important that they have a large number and they're using them than having one line that's really high amount. Don't get me wrong. Having 10, 20, 30, 40, $50,000 limit on one line is important, but not enough for somebody to pay $2,000 for it. That just doesn't provide enough value for what you're charging. And this is the way business credit works, is that business credit gives you the ability to basically be able to get more and more accounts and get higher and higher approvals. And that's one thing we have found. The more accounts you put on a business credit report, the higher and higher your approval amounts go, even if you're not using tremendous amounts on those lines. But the more you use those lines, the consistency of using those lines and trying to use as much of those lines as you can is consistent with you getting future higher approvals as well. So what I'm saying there is if you want to get higher credit limits on credit cards, higher credit limits on credit lines, higher loan approvals, there's two things you need to do. You need to get credit and consistently use it to grow your business and to free up cash flow. And then you need to make sure in doing so that you're, of course, paying it as agreed. Bring up cash flow every time I get an expense, something that has to be choices of how I pay that. I can pay with a debt, pay with a check. I pay every debt I can with the credit card because it creates a history of me paying that. Then I pay it off with my debit card. Then I pay it off with a check. If I use this strategy, I still can get around paying interest on the credit card, pay it off before interest accrues, but I'm establishing a history for lenders and credit issuers to see I am actually using the money that's being given to me. So a simple example here is that we've always paid our Facebook ads with our American Express card. We can easily pay cash for those ads, but by using them on the Amex, we're showing that we spend $1 million a year on this Amex card just if we only use it for ads. And that's what we want lenders to see. We want lenders to see we're spending $1 million a year on our Amex because that makes them more inclined to want to give us more credit. Now, if you're somebody that doesn't use credit cards at all and there's no history of your spending and you're spending $1 million on Facebook ads and you're just writing a check or using your debit card, well, then it's a night and day difference. Lenders don't want to give you a lot of money because they don't see that you're spending a lot of money. Now, we see this all the time. And the business owner says, yeah, but I'm spending $1 million on Facebook ads. Maybe it's not $1 million. Maybe it's $100,000. Maybe it's this. And maybe it's on Facebook ads. They're saying, I spend this money on this and this money on this and this money on this. Why won't the lenders give me money? Because none of that's being tracked. If I pull your business credit report, none of it shows up there. And because nobody can see it, lenders aren't inclined to give you money because they don't see that you're spending all the money that you are. So what we want to do as business owners is we want to put all of our spending on cards and lines that report to the reporting agencies. So that way, all the money we're spending in the business as the business grows, other lenders and credit issuers can see we're spending it, and they're more inclined to give us money versus using debit cards or checks where they can't see all of that stuff. Plus, it frees up cash flow because all of a sudden, if COVID hits out of the blue, well, guess what? We can leave the balances on credit card and pay interest on it and leave our cash in the bank until we get settled in and figure things out. And that's what we always do. As a company, we put the money on credit cards. We pay it off before interest accrues. Then when COVID hits, we stop paying it off. We let interest accrue. We leave our money in the bank. We put most of our expenses on credit. We let the debt increase while we keep money in the bank till we figure out what's going on. Then when we know we're okay, our sales are consistent, everything is good, then we'll go and start paying off that actual debt. It just helps us free up cash flow and use the cash for what we need when we may need it. And plus, the more you use business credit responsibly, again, the whole point is the more you're going to qualify. But if you're using and spending money that's not being tracked where lenders or credit issuers can't see it, then you're not going to qualify for more money. We also want to keep our business and personal funds separate, right? It's very important. SCORE, Entrepreneur, Inc., they all talk about this exact same thing. So I'll give you a simple example. My personal trainer, Rob, love him to death. Rob, if you're watching this, look at that. I'm just kidding. No, Rob, love the guy. He's fantastic. He puts me in really good fit shape. And he has a great business. He decided to leave his gym when I first met him and start his own business. And he's growing the business, and now he has some big ideas. And guess what he needs to execute those big ideas? He needs money, right? We all know he needs money. So the problem is, I said to him, okay, you have a business bank account, right? He said, nope, I'm using my personal bank account. And I said, are you crazy? Why would you even think of doing that? You've now been in business for 8 months on your own. And if you just would have used your business bank account getting money right now, you could get capital. I could tell you 10 different ways you could get money right now. But because you're using a bank account, that 10 goes to 0. You absolutely have to separate consumer and credit spending. You have to. This is the purpose of business and consumer credit, to separate the credit the business is getting and the credit you have. It's also the purpose of having a business bank account, to show the money going through the business separate from what's going through your personal. Plus your bookkeepers, your accountants, commingling of funds. There's a lot of issues you run into when you don't do this. Now, I would hope that all of you have done this from day one. It's the third thing I do, one of the first things. I typically get the business locked down. I find the name. I get the name locked out. I get the URL. I set up the address. I set up the phone number. Then I set up my Secretary of State. Then I get my EIN. Then I take that EIN and get my bank account. And I do it in one motion. One day, if I have it all done, I can have it done within about 2 hours, everything I just told you. But I always get the business bank account set up pretty much the same day or within 24 hours of setting up the entity. And I do that for a reason, because there are multiple credit scores out there, including check systems, for example, on the consumer side, including your bank rating on the business side, that will give you a credit score and rate your banking based on factors like how long your bank account's been open. So the minute I open the entity, I open the bank account. It's almost one and the same. Like the minute entity, boom, EIN number, boom, go open bank account. As a matter of fact, I did that once just to see how long it takes. It took me an hour to set up the entity, get the EIN, and set up the bank account. It took me 1 hour to do, was able to do all three. So the bank account should be set up right from when you set up the business. You got to start, even if you don't have money going through it for months, you need the longevity of the business credit, bank account. It's only going to help you. So you've got to separate personal and business expenses. You got to separate personal and business bank accounts. You got to separate consumer and commercial credit. Those are very important things to you becoming fundable. If you don't do that, then you are going to lose out on so much funding that you immediately could get 6 months into the starting of your business. So remember, your business expenses need to be in a separate business bank account. If you're not doing this, then the problem is you're going to lose out on a lot of funding, because nowadays the fastest, easiest money you can get comes from managing your business bank account responsibly. And if you can't prove that you've got this money coming through your business bank account, then unfortunately you lose out on a lot of money. Mal Green, welcome. Thanks for coming in. And by the way, if you haven't already, tell me your company name and where you're coming in from, and I'll give you a shout out here on the stream, give you a little bit of free advertising and promotion. Okay, so accounting. You also need to keep your reports up to date. You need to use software like QuickBooks. So it's so funny. I talk to so many people, and so many people are really freaked out that I do this. Whenever I always pay with a business credit card. No surprise. When I'm out for a meal, for example, a business meal. And then what I always do when that check comes is I go into my QuickBooks on my phone, and then I take a picture of the actual receipt. So there's actually a thing for boop, take picture receipt, bam, take picture, and I'm done. Now, I do that for 2 reasons. First of all, man, I don't know about you, but back in the day, I have envelopes and envelopes and envelopes of expenses. Like I have storage where I have these massive containers full of nothing but personal and business expenses, because I'm required by the IRS to keep them for so many years and then use them to give to the IRS if I ever get audited. I don't have to do that anymore. Now I have QuickBooks, and QuickBooks, I could take a picture of the receipt and then I walk away and no longer have anything to do with paper receipts because all I do is put them into my QuickBooks. So it makes it super easy for me to be able to manage my expenses. And it's nice because I don't have to have paper receipts anymore. And again, the nice thing is that you're actually saving when you do hire professionals because all of your stuff is in order. Your books aren't a mess because you're handing them all these paper receipts. Everything is kept in an orderly fashion. And there are also many other accounting softwares and several budget management tools that we talk about that actually help report to the business credit reporting agencies. So we actually talk about tools that help you manage expenses, manage user accounts on credit cards, and also help you build business credit at the same time. And if you haven't already, make sure you go to TaxHive.com Credit Suite. We've organized for you to get a free tax blueprint. All TaxHive does, or the main thing TaxHive does, and they actually help you figure out how to save money on taxes and pay less. Most people have an accountant, or maybe they have a bookkeeper, but they don't have a tax strategist. Strategist is somebody that just gives you insight on what you can do to save money. And so far, I don't think TaxHive's helped any Credit Suite clients without them saving 3 or 4 times the amount of whatever they ended up paying with TaxHive. So TaxHive, use somebody else if you want. But we've really done a lot of due diligence and found TaxHive's phenomenal to be able to come in and help you save money on taxes. And you get 100% tax blueprint on how to do that if you go to TaxHive.com/credit suite. So help you get your ducks in a row for lending. And again, it also helps you save taxes. And this is you want to have up-to-date tax returns. You want to have P&Ls. You want to have balance sheets, because that stuff is only going to help you get the harder to get financing like term loans and SBA loans. But you also need to make sure that you're working on your personal credit. Look, any business credit guru that talks about getting all this money and personal credit doesn't matter is lying to you. Okay, I talk about business credit and have for a decade plus. Like when nobody was talking about this, I was the one out there talking about it. And I will tell you that I have a lot of knowledge and experience in this area, and I still insist that personal credit is important. If you want to get loans, if you want to get credit lines, if you want to get SBA loans, it's going to be affected by personal credit quality. Some business credit reporting agencies like FICO Small Business Score, Experian blended data, even blend business and consumer reports into one. So you've got to make sure you address personal credit. And I always tell business owners you should be building business credit while addressing and fixing personal credit at exactly the same time. Now, I don't work with personal credit. I don't fix personal credit, but there's a lot of companies that are very reputable. So if you find a reputable company, then there's a really good opportunity that you could be fixing your personal credit while you're building your business credit at the same time. And Robert Converse from South Haven Capital, well, thank you for coming in. And Billy says, what is the cash advance process that a company takes a small percentage of every sale made on your business to get the loan paid off? So that's a very good question. So what Billy's talking about here, and this actually ties in perfectly with what we just mentioned about bank accounts. And what Billy's asking about here is something called revenue lending. It's also merchant cash advance. So here's the difference. These are two of the fastest, easiest ways to get money for a small business. Merchant cash advances basically look at all the money you process through credit cards, and you could be lent a percentage of all of your overall credit card sales. Now, they get paid back by taking money out of your bank account whenever you process those credit cards. They take a percentage. So if your credit card sales go down, well, then they take less money back. If your credit card sales go up, well, then they take a higher percent or a higher amount back because they're just taking an overall percentage of what you process. Now, revenue lending is a little different. Revenue lending looks at all of the money in your bank account, not just credit card transactions. We look at ACH deposits. We look at check deposits and cash deposits, and we look at credit card deposits. And then again, the lender lends you a money based on a percentage or a percentage of money based on what you're actually processing every month or every year in that actual bank account. But again, the things we talked about with fundability are crucial here, because if you don't manage your bank account, I gave you the 5 things lenders are looking at when they review your bank account. If they don't see those 5 things, you're probably not going to get approved. If they see that you don't have money at the end of each month, that you're negative, if you have a bunch of non-sufficient funds, if you're not managing the bank account responsibly, if you don't have consistent deposits, All these things can prevent you from getting the money. But if you do have those things, then there's a really good chance you're able to get approved. And Love in Motion Express from Maryland. Vanessa, thanks for coming in. Audio is pretty choppy. Let me check on this audio. Several people have said that. So give me an opportunity here to see if I can figure out the audio output. Let me see here. Hopefully that works okay. Okay, so let me know if that's a little bit better. And we've got Plush Cleaning Service LLC in the house from Peachtree City, Georgia. So hopefully that fixes the audio issues. If you still have audio issues, let me know. I changed the microphone, so I think that's good. I think it just defaulted to a bad mic. So thanks everybody for letting me know. And again, personal credit and public records can come up too. LexisNexis is a credit report that a lot of stuff comes up on that people don't realize. And let me tell you a secret most business owners know nothing about. LexisNexis is the root of where all of them get their data from. So let me give you an example. If you've ever had a bankruptcy, a judgment, a public record on your credit report, a tax lien on your consumer credit report, and you go to dispute it, and the credit bureau says it's verified, they are not verifying it with the actual legal courthouse. They're verifying it with LexisNexis. So if you ever wanted to get a public record, for example, historically off your credit report, if you disputed it and got it removed with LexisNexis, then disputed it with the Consumer Credit Bureau, poof, the thing disappears. Now, let me give you an example of where this goes wrong. So we got an SBA loan, and the SBA, we want to collateralize my personal home for the loan. Well, that doesn't make any sense because we had $1 million in account receivables, well more than we were borrowing. So our assets well surpassed the amount of money we were borrowing. There was no reason to get personal assets involved. So when we asked them, they said, well, here's the problem. You've got these judgments on your LexisNexis credit report. I said, I don't have any judgments. That's crazy. So I got the LexisNexis credit report, and the judgments were wrong. They were not even correct. And so I proved to the lender that they weren't correct. I proved to LexisNexis they weren't correct. LexisNexis removed that from the credit report. I never again had a problem before. So this is the problem. You see, you are led to believe that public records stay on your credit reports for 10 years. And we think, because all the stuff that we read about consumer credit reports, that in 10 years it's gone and nobody knows it happened. That's not true. It sits on Lexis indefinitely. It's there permanently forever, unless you address it and get it removed. So these are things you need to know, because public records on your personal credit reports will carry over to LexisNexis, and that will then carry over to being able to create all kinds of issues with you getting money. I actually said it a little bit off, because LexisNexis gets the public record data, and that credit report creates the issues indefinitely unless you dispute to clean that up. So my advice to you is to go to LexisNexis and get a free report. It's 100% free. It's over 30 pages or 300 pages big. I've showed it before on live streams. It's huge. I've also got training on YouTube about everything LexisNexis and what's in those reports. But get a copy of your LexisNexis credit report and make sure you're cleaning that up, as well as your training Union Equifax Experian. It goes to helping you have your consumer credit in order to be able to get financing. And the next thing you want to determine your fundability. Where are you running this? Is your fundability jacked up? Is it going to prevent you from getting financing? Well, you can give us a call or schedule 100% free consultation, and we do a fundability assessment for you for free. We look at what lenders look at, and we tell you where the issues are, so you know what to fix to make your business more fundable. I can tell you after story, clients that fix one thing in regard to their fundability, they get denied, they fix one thing, they go back and get approved. I'll give you an example. One of our clients, the Samples, got denied for an Amex card. They updated their Secretary of State record to match what was on their application. They went back and got a no-limit Amex card. One change, no limit Amex card. One change. There's 125 fundability factors. So if one thing can make that big of a difference, once you get this figured out, what's wrong, and you fix it, it makes a night and day difference to your ability to be able to get approved. And you also have more about fundability at creditsuite.com. By the way, it's worth a look. creditsuite.com is brand new as of about 2 weeks ago, completely redone. And we have provided a tremendous amount of information that's free for you on our main website at Fundability, or on Fundability at creditsuite.com. And by the way, you can also, if you got value from this, like and subscribe on our channels. It takes less than a minute at the top right of our page. And that is going to get you access to all kinds of daily and ongoing tips through videos, text etc. from all of our social media channels. By the way, did you get value from this? If so, go to creditsuite.com/toolbox. I have about $400 worth of goodies that we're giving away 100% for free just because you share our next live stream. And that's at creditsuite.com/toolbox. So again, if we can help you along the way, let us know. And don't forget, you've got that free fundability assessment as well. So hopefully that provides you some value. And again, I don't know what's going on with the audio, but I will try to figure that out. And we've got Darden Enterprises at Warrenville. Oh, we got some really cool people in here. We got The Wealthy Space from Atlanta, Darden Enterprises from Warrenville, Illinois, Rasheem Sanford with Build Better Beautiful LLC in Charlotte. Thanks for coming in. And I appreciate everybody giving me a shout out. Replying to Credit Suite, I have some questions. Well, then let us know. If you have questions, all you have to do is send us an email, give us a call, and we will actually not just do a fundability assessment. We'll do a finance assessment to tell you all the money you can get right now. And we will also come in and be able to give you tips and tactics to build your business credit. It's 100% free with a consultation with us. You can give us a call. You can email us or go to creditsuite.com/consult. My apology for the audio issues. I am going to get off this and try to figure it out. And I look forward to seeing you on our Clean Contracting from, oh man, Montezuma, Georgia. Our Clean Contracting from Montezuma, Georgia. Thanks for coming in as well. And Momentum Financial Group in Tampa. Hey, I'm in Tampa too. We're neighbors. Look, I'm down here, and this is the towers. I'm down here in Channelside. So it's good seeing some locals in here. So thanks everybody for tuning in. I'll be back Thursday, and we'll have a podcast interview going live for you Wednesday to talk more about all the money you can get to be able to start and grow your